Hey, what's up, stock compounders? Brad here. Wow, we are live. It has been 2 weeks since I've been live on this channel. A lot has happened. So I spent a week in Asheville, North Carolina, looking at properties. Okay, I didn't realize we were going to spend most of the time looking at properties. We're looking for acreage, like over 20 acres. And there's actually a property we made an offer on. Okay, we didn't get that property because someone else came in with a full cash offer above asking price. It's a very competitive market over there in Asheville. So a little disappointing, but at the same time, it's probably good that we don't get our first offer. I think I remember reading this from Robert Kiyosaki in Rich Dad, Poor Dad. The way he started out in real estate, his mentor told him, okay, you need to look at least 100 properties before you even think about buying one. Because that's just what it takes to really understand the market, to understand what you're looking for. So really just at the beginning of educating myself on property in Asheville, North Carolina. But it was a good trip. We've got a question already. Jonathan Morris, have you looked at Boston, Omaha much? I haven't looked much at Boston, Omaha. It came across my radar. I think it was Elias. Elias, what is his channel? He's got a value investing channel on YouTube. It's pretty big. I think he's got like 70 some odd thousand subscribers. And I think he did some work on Boston, Omaha. I took a brief look at it, and it just didn't seem like something that was interesting to me. But yeah, Boston, Omaha, it's been equated to like a Berkshire Hathaway. Of course, it's in Omaha, so it's easy to see why that might get some traction, but haven't looked much at it. No, I haven't seen it any 13Fs either. How big is it? Let me just check how big Boston, Omaha is. I think it's BOMN, if I recall, is the ticker. And looking at the market cap might give us a sense for why super investors might own it or not. So it's got a $916 million market cap. So that's not too small that most super investors wouldn't be able to get into it. So right there, that tells me something. If I go to Data Roma and look at Boston, Omaha, yeah, so there's no super investors that are tracked by Data Roma who own it. So, for me, that already gives me pause for spending any time on this name. The fact that it's almost $1 billion in market cap and there's nobody in Data Roma who owns it. You're like, well, I'm not super excited to spend time on that one. Thoughts on Baba. So earnings came out not too long ago from Baba. There was a lot of talk around that in Twitter. I saw Frank put out a tweet. The earnings weren't great, but it doesn't break his thesis or anything like that. It's not something I've gotten to yet in terms of looking at Alibaba's earnings. So I can't share much on that. Have you looked at PayPal? So PayPal, I haven't spent any time on PayPal. I noticed for Terry Smith, PayPal is one of his top holdings in Fundsmith. The price has really tanked on it recently, hasn't it? It's near the 1-year low. It's basically there. So that could be interesting. I'm going to check real quick. What is the free cash flow yield on PayPal? That's kind of Terry Smith's indicator for is the price reasonable? It's one of his primary valuation metrics. So if I am in ticker right now looking at PayPal, the cash flow statement. So, say free cash flow is around $5 billion. Take cash from operations, subtract out CapEx, around $5 billion. Free cash flow, what's the market cap? about 221 billion. So 5 divided by 221, 2.3% free cash flow yield for PayPal. That's not bad. That's somewhat intriguing to me. And then if we look at some other metrics like gross margins, okay, not as high as I would expect from a company like PayPal, 48% gross margins. But I may have to look at PayPal given the recent dip in stock price. I just want to see for Fundsmith, where does PayPal rank? So it's their second largest holding, okay, in Fundsmith. So might be one to look at. I want to see in Dataroma, is there anybody who's added PayPal recently? PYPL is a ticker. I think Fundsmith got into PayPal when eBay spun it out. That was like 5 or 6 years ago, I believe. So not much recent activity in PayPal. Pat Dorsey owns a very sizable stake at 13%. Terry Smith at 9%. So yeah, that may be one that I might take a look at. Thanks for bringing that up, old school millennial. Let's see. What are your latest thoughts on Baba? Thanks. Yep. No new thoughts on Baba. I see it just continues to drop like a knife, which is interesting. I'm holding strong with my position. Still have yet to dig into those recent earnings. It's been a very busy couple of weeks. But yeah, there's a lot of people wondering what to make of Baba, right? In this environment. Retro Ranger just cloned a $5 position on IAC, right? Interactive Corp from Dennis Hong. Also, he bought a new company, China Meidong, and described it as the best auto dealer in the world. Retro, where did Dennis Hong talk about that? I really want to dig more into what Dennis Hong at Shaw Spring Partners is doing. Just in a recent talk from Guy Spear with the Kolkata Value Investors Club, Guy Spear actually mentioned Dennis Hong as someone he really respects. I think he saw a talk from Dennis Hong in a conference in India or something that Guy Spear was recently at and was really impressed by him. So Dennis Hong is one of those sort of investors on my short list of people to learn from. So Retro Ranger, let me know where he talked about China Meidong. I may be butchering that pronunciation, but what can you do? Yeah, IAC, I briefly looked at IAC as I was compiling a list of everything that super investors did in Q3. And I think where I arrived very quickly with IAC is I believe they're not currently profitable. So operating income minus 89 million. They've only been profitable 1 year back in 2018. Now, after hearing Guy Spears talk, maybe I shouldn't just exclude them right off the bat for having negative operating earnings. But I did. And yeah, I don't know much about IAC other than that Dennis Hong, I think it's his largest position. And there's a number of other investors, value investors in my circle on Twitter that seem bullish on Interactive Corp. So it's not on my short list of companies to dig into, but it is on my radar. So if you have an elevator pitch about why maybe I should dig deeper into Interactive Corp, other than the fact that Dennis Hong added to it recently, let me know in the chat. Let's see what else we got here. It's a lively chat. Love it, guys. 5%. Yeah, 5% position from IAC. Okay, so that's a decent starting position for Retro Ranger there. Jack, do you think there's something nefarious brewing within Chinese equity valuations, economic collapse, fraud, conflict delistings, coordinated shorting? Well, with a market like China, it's a little bit harder to really have that conviction that what we're seeing is actually true. One of the reasons Terry Smith has a lot less exposure to China than a lot of emerging market indexes, emerging market funds, is because, well, partly it's because with technology companies in China, you can't own them directly, right? You have to own them through these VIEs, and that just doesn't quite sit right with Terry Smith. But it's more difficult to really trust the numbers coming from a country like China versus a European country, the U.S., where things are a little bit tighter in terms of reporting requirements and things like that. So it gives me a little bit of pause. I certainly don't want to have too much exposure in my portfolio to China. I took a big stake in Alibaba, back when it was like $227 a share, I think shortly after Charlie Munger bought in. And I've really just been sitting on my hands since then. I have a bit of exposure to Tencent through Process. So, I'm not eager to add new positions in China at the moment. So getting back to Dennis Hong's new buy in China Maidong, it's probably not something I'm going to dig into, just because I don't want too much, geographic exposure to China in my portfolio. Let's see. Thoughts on Alibaba's net income being largely determined by the short-term valuations of their investments being marked down. These are short-term games, and it's not something that really affects my investment thesis for Alibaba. So, and I put out a tweet yesterday I was reading through the earnings transcripts for Naspers, trying to figure out. Monish Pabrai alluded to the fact that Koos Becker had incredible things to say about Pony Ma and Tencent. And I was just trying to get a sense for myself of what exactly Koos Becker said. And, there's very little I could dig up from the resource that I was using. But Koos Becker did mention something related to this, where having investments that are, minority interests, and how that can impact the accounting, doesn't really matter for someone like me who's a long-term investor. The benefit, the earnings, the cash flows from the business are going to come to a company like Naspers and Prosus, regardless of what's required in the reporting. Retro Ranger, IAC seems like a really good long-term company, buying private companies, building them up, and profit from their IPOs. So that's kind of the business model of Interactive Corp in a nutshell. Yeah, I guess what I'd want to understand better is the track record of management, right? I don't know anything about the management of IAC, but why should I be putting my hard-earned money with them? Why should I be trusting them to compound my money with all of these other options available? That's kind of the lens that I would look at IAC through when one of the first questions I'd want to answer for myself. The shareholder letters are awesome, much like Buffett. Yeah, I should. Okay. Yeah, maybe I will take a look at one of IAC's shareholder letters. Thanks for that tip, Retro. Jonathan, of course, there's government risk with any Chinese tech name. Isn't that what creates buying opportunities risk? Yeah, for me, buying opportunities really come when the market, like Pabrai has said this a number of times, when the market is confusing risk and uncertainty, right? So uncertainty doesn't necessarily mean that something is risky. Okay. Uh, and how I would explain that risk, at the simplest level, risk is the risk of losing money. Okay. The risk of permanent loss of capital. If you're an academic, that's not how you would define risk. You would define it as volatility. Okay. Which makes some sense, right? Because if the price of a stock is moving around a lot, and you take into account the psychology of investors, that price movement, that wild price movement, is going to knock a lot of investors out of the game. Okay. Their fear is going to get triggered and they're going to head for the hills. So, if you're not a completely rational investor, which none of us are, there is some, there's some good reason to associate risk and volatility. But if you can just really understand the business, okay, if you can treat investing like you're owning a stake in a company, right? This goes back to the intelligent investor and Benjamin Graham. You don't have to pay as much attention to the fluctuations in price. You can look at those fluctuations as serving you, right? Mr. Market, the manic depressive Mr. Market, is there to serve you. And how he serves you is he gives you opportunities to sell at prices much higher than intrinsic value and to buy at prices much lower than intrinsic value. And those opportunities are skewed even greater when there's more volatility, right? So yeah, that's kind of what I see happening in China right now, where, with the government regulations, people who are outside of China, and maybe this is happening with people inside China as well, I don't know, but people who don't really understand the Chinese government, right? They don't understand this communist regime that is the CCP. It's easy to get spooked when they're doing things that we're not used to in a country like the U.S. And to just react emotionally, react with fear because we don't understand it, right? And it probably makes sense to react with fear if we don't understand something. Okay, that's kind of hardwired into our DNA. If we don't understand something, we want to get away from it. Okay, because we don't know what it's going to do. So I think that's in large part how investors are reacting to China right now. And there may be some not rationality. There may be some good reason for investors to respond that way. But anyway, that was a tangent. Let's see. ADI, yo. What is up, stock compounders? Maybe I should add that to my intros. Yo. It's not really me. I'm not a New Yorker. If I was from New York, maybe that would feel better. But who knows? Selling BABA to lock in tax loss to buy more attractive and similar investments in process, a true tax loss harvest. So I assume, ADI is referring to Monish Pabrai selling Alibaba in Q3, sold like 78%. I have no idea why Pabrai did that. I made a video about this. If I had to guess, there is a tax loss harvest component there. It'll be interesting to see if he buys right back into Alibaba, right? Especially as it continues to drop. If it's still low in the first quarter of 2022, we may see Pabrai buy back in. He does seem more bullish on Tencent, likely Tencent via Prosus, just like what Guy Spear did to get exposure to Tencent. So I don't know what Pabrai is doing. I'm really just speculating that there's a tax loss harvest element there. And I have no idea what he's doing with those proceeds. So hopefully we'll find out soon if it shows up on a 13F or if it shows up in ticker terminal. Does Racist get paid revenue in euros and dollars from international warehouse clients? So that's what Pabrai has alluded to in some of his talks, that a lot of Racist revenues do come in euros and dollars. So that's my understanding. Eric, have you looked at Coin? Yeah, so Coin is on my short list of companies to look at. Now, for a lot of you dyed-in-the-wool value investors, that might be hard to stomach, right? But I really appreciated, if you guys haven't seen Guy Spears talk with the Kolkata Value Hunters Club, I'm actually going to put out a video on it today. Actually, before I do that, I should get to this super chat. We've got a super chat here. Thank you very much, Pravesh. It doesn't look like there's a question from Pravesh. Pravesh, if you come up with something, hit me up. I'm happy to tackle that. But thanks a lot for your support. Really appreciate that, Pravesh, with the super chat. So Coin. I have to admit, at first, when I saw, who was it that bought Coin? I think I have it open here. Spreadsheet. Coinbase, Fred Liu of Hayden Capital, okay? And he did a write-up of it. If you just go to Hayden Capital's website, you should be able to access that write-up on Coinbase. I'm intrigued by it, quite honestly. And, I'm going to talk more about this in my highlights video from Guy Spear recently. But Guy Spear actually mentioned Coinbase in that talk. And it's an interesting way to play this crypto boom, right? It's sort of a pick and shovels play to play the crypto boom where you don't have to know who the winners are going to be. You don't have to bet on Bitcoin. You don't have to bet on Ethereum. There may be some other coin that comes out of left field and just dominates because it just has, a more compelling ecosystem than either of those. But if you're buying into Coinbase, it doesn't really matter which crypto wins, at least in the short term, because Coinbase makes money, regardless of which crypto wins, right? It's how people buy into these different cryptocurrencies without having individual wallets and all of that stuff. It's sort of, if you're used to having a brokerage account going through a platform, it's a way to do that and get into crypto, right? It's a platform for crypto where you don't directly own the crypto, but it's held through this essentially crypto brokerage. So Coinbase is really interesting to me. As a value investor, it's a little tough, but it helped hearing from Guy Spear that people who are dogmatically against crypto are probably making a mistake. Okay, and that doesn't mean it's financially prudent to invest in crypto now. I think it's very early in the game. Probably most people who think they're investing in crypto right now are going to lose their shirts. Okay, there's a lot of bubble-esque aspects to crypto, but in terms of learning, and Guy Spear thinks this as well. It's a mistake to think that blockchain isn't going to impact every industry, and probably not that long from now. Okay, so if you're not curious about it, if you're not learning about it, you are vulnerable as an investor. So and I buy into that. I think that's right. So. But I haven't dug into Coinbase yet. Like I said, I'm intrigued by it. It's not an insane valuation to me either. I mean, if you look at the free cash flow yield, it's actually quite attractive for Coinbase. On a valuation metric like enterprise value to revenue, it's trading at 9. Okay, that's next 12 months enterprise value over revenue, 9x. Okay, so compared to Nvidia or Shopify or a lot of these other emerging Web3 companies, Coinbase seems quite reasonable in terms of where it's priced now. But again, I have a lot more digging to do on that. This is definitely not investment advice. Do your own work. But Eric, I am intrigued by Coinbase. And it's just growing like gangbusters, right? That is absolutely the case. Cloning Charlie is greater than cloning Monish. Yeah, originally getting into Alibaba, I did clone Charlie. Charlie was really kind of what tipped me over the edge to put my toes in Alibaba. I mean, Monish clones Pabrai, right? Clones Pabrai. Monish clones Munger, right? I think that's really what got Pabrai to take a plunge into Alibaba as well. Not seeing it in 13Fs, because the 13Fs actually they did Charlie's. They were for the same quarter. Okay, Charlie's came out earlier because he's been filing sooner for whatever reason. But I'm sure Munger and Pabrai talked about Baba. I think they usually have dinner like every week or two. So, but Charlie hasn't had great success with investments in China. Okay. So when you're cloning, I think there's some importance to looking at, all right, what is this investor's track record in this particular area? Okay, you wouldn't necessarily have wanted to clone Buffett in retail. Okay, he doesn't have a great track record in retail. But cloning him in banks, that would probably have worked out very well for you. So, it helps to consider that as a cloner. Retro Ranger, write Dennis Hong on PM via Twitter. He talked about IT in his letters. He will send them to you. So apparently Dennis Hong is fairly receptive to direct messages on Twitter. That's exciting to know. I might have to try that. Thanks, Retro Ranger. JJ, not as many videos anymore. Yeah, JJ, that's not something that's going to continue. That was really just the last couple of weeks have been crazy. I took a trip to Asheville, was able to make one video there. And then, getting back, I find out one of the parents of one of the kids in our nanny share, right? My son, Leo, is in a nanny share. She tested positive for COVID. Okay. So we've been like, all right, so is her son going to get it? And then my son and his son were in this nanny share together. Is Leo going to get COVID? So, it's been a whirlwind couple of weeks with travel and then with this COVID scare where we're not out of the woods yet. It's sort of we just got to wait and see if anything develops. So it's a little exciting, a little more excitement than I want, but it is, it's the world we live in right now. But that was a long answer to the question. You will be seeing more regular content from me. I'd like to be putting out probably 3 or 4 videos a week. So don't worry. Sebastian, good evening from Germany. Good evening, Sebastian. Thanks for tuning in. I have some German blood in me, so I don't know what that means. But ADI, Asheville or Oakland? Where does the Oracle of the Oracle of Oakland? That's good. I am in Oakland still. We're probably not, if we do move to Asheville, it's not going to be until next summer, or for you people in the Southern Hemisphere, next winter. June, I should just say June. Probably June of 2022 is when we'd be moving if we do pull the trigger on that. But Asheville is very compelling. The more time I spend there, the more I can really see, okay, yeah, this could feel really good to sink roots here. So Boomer, hello, Boomer. Hello, Brad. Let's see, Eric. Oh, let's see. Pretty significant, but I did see growth in non-Tencent Prosus holdings. Pretty insignificant. Benjamin, could it be that Monish bought Coca-Cola ISIC? I heard him once mention this company. Yeah, he could have bought. He mentioned it in one of his talks. I think the valuation was a bit rich for him. But yeah, I think maybe in one of his funds he bought it, more of the mechanical investing funds. Maybe the India fund. I don't quite remember, but if he does own it, I think it's a pretty small stake. But yeah, could be one of these Turkish compounders that he's loading up on. Hopefully, we'll find out. Have you ever looked at any Canadian oil sands companies? No. So I'm really not interested in the oil industry. Um, some people would say we should be investing where the return potential is highest, rather than inserting our values into the investment portfolio. But I do insert my values into my portfolio. If I don't think that what the company is doing is making the world a better place, I'm big on permaculture and sustainable living, and the oil just doesn't quite resonate with me in terms of where I want my money invested. And I'm a hypocrite, of course. I use oil, right? I drive a car. Well, so the car I own runs on compressed natural gas. Obviously, that's still a fossil fuel. My wife has a Prius. It's a plug-in Prius. So there's like 13 or 14 miles we get. That's pure electric. Obviously, the grid isn't completely clean. There's coal burning power plants, but it's getting cleaner. So, I use oil, but I don't necessarily want my money invested in an oil company. That's just kind of my personal take on it. But thanks for the question. Do you think Prosus would be the best way to get exposure to Tencent, or do you think the OTC route is still the best way to go? So I've done both. I actually own the Tencent over-the-counter stock, and I own Prosus. I have much more in Prosus, Prosy, so the over-the-counter version of Prosus. I don't think you can really go wrong with this. Again, this isn't investment advice. Whether you go direct Tencent or you go Prosus or even Naspers, right? Matt Peterson of Peterson Funds decided to go Naspers, right? It spoke to the kind of the value orientation that he has, where Prosus gives you a discount from just buying Tencent directly, and then Naspers gives you a further discount. Now, I have some questions about how value is going to be realized over time in Naspers versus Tencent. I personally believe Prosus is a little bit stronger than Tencent in terms of long-term compounding. But I don't think you can go too far wrong in any three of those. So personally, I like Prosus. Barry, see that Daily Journal has hit 400 today, moving up strongly. Maybe the value of the SaaS is finally being recognized. Yeah, maybe. I kind of doubt it. I think, it's really a long-term play there with Daily Journal Technologies and that SaaS company really being appreciated by the market. So I sense that there's probably something else going on there than a sizable chunk of investors waking up to the value in this SaaS business underlying Daily Journal. That's my sense. It wouldn't surprise me within the next 6 months or a year that we see Daily Journal back down at $300, maybe even $200. So that's just my take on that. And I am not a trader, so I'm not using any kind of technical analysis to guide my assumptions here. But that's my take. The only thing I would worry about Alibaba is VIE structure. Do you have concerns too? Yeah, it's a concern, right? It's a concern to not directly own shares in Alibaba. It's a concern. I think it's a risk that I've been willing to take, given the strength of a company like Alibaba, the market tailwinds, right? With the consumer class rising very quickly in China, but it's a concern. But you really have to take the big picture and weigh that for yourself. Do we have another super chat that I didn't get to? Yes, ADI. Sir, what recent 13F buy or sell do you find yourself thinking about the most in terms of it just being on your mind a lot? Recent 13F buy or sell. So I'm going to pull up my spreadsheet, and I'm going to make a video about this soon. What I've seen from 13Fs. The one that's been on my mind the most is Coinbase. And I talked about that a little bit recently. Twitter was on my mind for a little while. Stephen Mandel's addition to Twitter, he like more than doubled his position in Twitter. It's still only his 7th largest holding. Matterport was occupying a little bit of my brainwave space for a while. Bill Miller bought into Matterport, which my understanding of Matterport, it operates in the real estate sector, where it's sort of like you can tour homes from home, right? You don't have to leave home. So, it really makes sense in this world where, there's a pandemic going on, to be able to really get a sense for these properties virtually, I think is a very powerful business model right now. But they're losing money, right? So I didn't really sink my teeth into Matterport. I'm happy to wait until they're profitable, even if I miss out on some upside. So yeah, those are the big ones: Coinbase, Twitter, and Matterport. I think I'm going to hold off on Twitter. Obviously, I think Twitter is a really valuable network. Okay, it's incredibly valuable, but Twitter has not been proficient at extracting value for itself. And I think that it's going to be difficult. I think it's going to be quite an uphill battle for Twitter to extract financial value for itself and its shareholders. So I'm happy to sit on the sidelines with Twitter until I see that story change. So yeah. And then Dropbox was, of course, interesting. Seth Klarman bought into Dropbox. Dropbox has some pretty strong metrics, Terry Smith metrics, return on capital employed. Again, I'm going to get all this. I'm going to get into this in a different video, but I mean, you guys are my homies, so I'll give you a sneak peek. So return on capital employed for Dropbox, I mean, it's not great. It's 16% over the last 12 months, which I like to see something north of 20%, ideally north of 25%, but it's been growing, okay, very consistently over the last 5 years or so. So it's return on capital employed is heading in the right direction. Gross margins, 79%. Okay, those have been growing as well. So that is a very compelling gross margin line right there, 79%. Free cash flow yield on Dropbox, 7.4%. Okay, that is very strong. Okay, 7.4% free cash flow yield. The average for Terry Smith's companies is like 2.8% free cash flow yield. So the numbers look interesting, at least the kind of couple Terry Smith metrics that I looked at for Dropbox. So it's one I want to do more work on. ADI, $10. Holy smokes. Since you've talked YouTube business before, I'll ask this. Yes. So for those of you who don't know, follow After Dinner Investor on YouTube. He recently, I think it was pretty recently, he started putting content on YouTube, really trying to grow. So help him out. Since you've talked YouTube business before, if out of line, ignore, how is YouTube life different at 10K subs versus 1K? And what do you envision at 100K, which you will get to? Yeah, that's an interesting question, After Dinner Investor. How is 10K subs different from 1K? Well, I'd say the main difference is there's a much more vibrant community, okay? So the value of the community at 10K subs is orders of magnitude larger, meaning when I put out content, you guys are talking to each other in the comments. You guys are answering each other's comments in ways that are more insightful many times than I would be able to. Okay. So there's a snowballing value of the community that happens. And I'm really starting to see it at 10K. I'm sure at 100K, assuming YouTube can get their act together with the spams in the comments. If they can get that together, it's going to be an incredibly vibrant community at 100K. So that's been a really exciting thing to experience. But from a content creator perspective, it's not that different. I mean, it's nice to see my videos get traction faster, right? Probably at one, I don't remember exactly at 1K subs, but maybe I was getting 100 views in the first day, something like. I could look this up and give you more accurate figures, but now when I put out a video and it gets like 2,000 views in the first 24 hours, that feels good, right? It feels like there's just more traction. There's more people paying attention to my content. So it helps. It helps kind of give me a boost in terms of wanting to make content and hear from all of you, feedback around my content. So I guess that's the big difference, but it's not that different. Okay. If you think, when you hit 1K and you hit 10K and 100K, that it's going to be life-changing. It's not that different in terms of creating content. But thanks for those questions. Have you looked at Paytm? So I have not looked at Paytm. It's the only Indian company that has Berkshire as an investor. Well, that right there in itself is intriguing. Indian version of Ant Financial, SoftBank, and Ant Financial is also invested in the company. Okay. Paytm I assume there's an over-the-counter ticker available for the US. Let me just quickly look up Paytm. Listed in the, maybe there's not. Maybe you can only buy it through the Indian exchange. So if that's the case, I don't know how to access India as a market. So because of that, I'm not going to really spend time looking into Paytm. Gross margins I see are negative. Operating income is negative. So, again, after listening to Guy Spear, not necessarily a reason to discard it, but it's hard for me to get excited about a company that's losing money. Like Terry Smith, I'm perfectly comfortable waiting until it's a clear winner, okay? And to me, it's not a clear winner until it's making money and probably making substantial money. So I'm happy to wait for that. Let's see. Does Greg Alexander own Delivery Hero? I believe he does. So Greg Alexander, for those of you who don't know, one of the investors most highly regarded by Warren Buffett. This might have been 10 years ago that Buffett said this, but he basically said, if I was going to hang up my hat and I had to pass my investors on to another manager, my top three would be Li Lu, Seth Klarman, and Greg Alexander. And Greg Alexander runs a fund called Conifer Management. So if I look at Conifer Management in ticker terminal, Delivery Hero is the largest position. And that's from a trade report, right? That's not going to be from a 13F because Delivery Hero is a company in Germany, okay? And how big is it in US dollars? It's a 33 billion market cap company. And they offer online food ordering and delivery services, okay? It's headquartered in Germany, but it operates, 44 countries in Europe, the Middle East, North Africa, Asia, the Americas. So it seems to have pretty well a global footprint. But yeah, seems like it's Greg Alexander's largest holding. He did trim it a bit recently, it looks like. When was that? That was in June of this year. Greg Alexander took off about 23% of his stake in Delivery Hero. I assume he sold it. Maybe there was a dilution event. When I was digging into Nasper's ownership of Tencent, it looked like before Tencent went public, Nasper's owned about 50% of Tencent. After the company IPO'd, that stake dropped to 36%. Okay, so Nasper's stake in Tencent was diluted a little bit. That may be the situation here with Delivery Hero. It's not necessarily the case that Greg Alexander has been selling it, but pretty interesting. Might be one worth digging into, Delivery Hero. DJO has been on my radar for a while, especially after Tom's podcast with Matt Peterson. Yeah, that was a great podcast. And it does seem compelling. You know, what Matt Peterson says about Daily Journal is there's just a lot of hidden assets, okay, that aren't obvious to investors if they don't kind of look under the hood and go deep on Daily Journal. Pabrai also was asked in his annual meeting recently about Daily Journal, and I had never seen him asked about this before. But he basically said, you know, it's an uphill battle for Charlie Munger and Daily Journal in this tech space, right? Trying to run this SaaS business, this legal SaaS business. So, you know, Pabrai knows a thing or two about that space, but I wouldn't bet against Charlie. And that's also what Pabrai said to conclude that comment. It's not something that I'm planning on buying anytime soon. It is intriguing. It's probably, you know, not in the top tier of companies I have my eye on, but maybe in the second tier is where I would put Daily Journal. Dennis Hong even gave my friend Math on Twitter his opinion on the size of cash position in a portfolio. He's really a kind person. Wow, yeah, so it seems like Dennis Hong is quite generous in terms of sharing his knowledge and wisdom. So that's great. I'm friends with Math as well on Twitter. Good guy. SC, regarding coin, I'd agree that there's a lot of potential out of crypto from a societal perspective, but the coins may be worthless. What happens if people trend away from punting coins? Yeah, I think a lot of the coins are going to end up worthless. It's sort of like what we saw with the internet boom, right? The internet, all of these internet companies that came out in the .com bubble, right? And the vast majority of them went to zero. There's actually a really good talk from Monish Pabrai on this, kind of going through past booms. If you look at when the auto industry got started in the 1910s, 1920s, there were hundreds of auto companies, okay? And virtually every investor that was invested in the auto industry lost their shirts, okay? Even though it's clear that autos, right, cars exploded. So the idea was correct, right, that cars are going to be a huge thing, right, for the world. That thesis was correct. But finding the winners within that is an entirely different game. And I think we're going to see the same thing in crypto. But, you know, for me, and I don't have my thesis at all fleshed out on this with Coinbase, but, you know, to me, it's okay if a lot of these coins go to zero. Coinbase makes money when people buy coins and when people sell coins. So, you know, it's a pick and shovels play in a sense. At least that's my current understanding of Coinbase, which is quite limited. So don't quote me on any of this. Let's see. So I assume, SC, what you're asking, what happens if people trend away from punting coins, means what if people just stop trading as much, right? Which is going to potentially reduce the revenues for Coinbase. It's hard to see that happening. Okay. I'm not too concerned about that, but it's possible. Let's see. Could the cryptocurrency get derailed because of multitude of such currencies? Absolutely. How do you see a consolidation among the many current? See, this is too hard for me. This is something that I have no knowledge of. I can't really speak to. Can regulation by any authority play any role in this? Absolutely. I mean, one of the bullish cases for Coinbase is that they've been very clear from inception that they want to work with regulators. Okay, they want to do everything above board. Okay, that's really what makes Coinbase stand out from others like Binance and some of these. Binance, I'm not necessarily throwing into the dark pool of crypto, but there's a lot of exchanges that aren't interested in being regulated and are finding ways to skirt that, and that's not Coinbase. So I think there's value to that. Let's see. Did you dig any deeper on using options to build positions, boost returns? Not really. I mean, Matt Peterson talked a little bit about this in the Investing with Tom podcast, so I would encourage you to check that out. It's kind of a whole other rabbit hole to go down from my perspective. And there's too much else that I want to dig into right now. So I kind of put it on hold in terms of getting into positions by selling put options. But it's still intriguing. It's definitely something I plan to get into at some point, and probably a strategy that I will execute at some point. I don't see moat on Dropbox and no longer growing. Right, so that would be an issue, right? I presume Seth Klarman sees a moat on Dropbox, or I don't see why he would have bought into it. And obviously we've got to do our own work here. If we're going to buy a position, we've got to have our own conviction, unless we're doing sort of a mechanical cloning approach. But the fact that Klarman bought in tells me there's a good chance that there is a moat. Okay, he's a very intelligent investor. So the question is, what is the moat? And how do we understand that? Revenues, I mean, they've been growing fairly well over the last 5 years. They've been slowing down it looks like from 2019 to 2020, 15% revenue growth, which definitely isn't nothing. But yeah, I'd want to understand, why is that growth slowing down? And is it likely to continue slowing down? Or, is there something that happened recently that caused kind of a short-term slowdown for Dropbox? Any thoughts on volatility hedges? No, I don't care about volatility personally. So, volatility only kills you when price fluctuations guide your buy and sell decisions. Okay. It doesn't do that for me. At least that's what I tell myself, right? We all have some emotion that leaks out into this game of investing. But I don't feel any need to hedge volatility. I guess, the easiest way I would say to hedge volatility is to just own more positions. Okay. Instead of 5, like I'd like to, in an ideal world, I'd like to have 5 very heavy, very strong conviction positions at like 20% each. Maybe that would just create too much volatility in your portfolio, more than you'd be comfortable with. It's really about knowing yourself at the end of the day here. You've got to construct your portfolio in a way that you can live with the ups and downs, okay? And even if you buy an index fund, those can be tough to live with, right? So it's about knowing yourself and putting things in place Like Pabrai says, one of his 10 commandments is, thou shalt have a rope to climb out of the deepest well. So having a checklist, right? Putting things in place where, if the train goes off the rails, if your portfolio is down 50% and the market's just down 20% or something like that, you've got ways to cope with that emotionally. Let's see. Thanks, ADI. Looking at any UK companies, I spent a little time with Naked Wines. So that's one that was somewhat intriguing to me. I spent some time on ASOS. Anything else from the UK? I think those are the main ones that I was looking at recently. I didn't put any money into those. UK is a little bit interesting to me in that there's been a lot of outflows from the UK with Brexit, with money chasing hot tech and IPOs. There's not a lot of that happening in the UK. So there's probably opportunities, really compelling opportunities in the UK. It's not a geography I've spent much time digging into, Jamie. Any luck finding out what else Monish is buying in Turkey? No, I don't have anything to report on that. Hopefully we see that in ticker soon. Dropbox isn't cash generative, and their share buybacks are purely token if you account for their stock-based compensation. Okay. I don't have any thoughts on that. Barry, Matt Peterson gives some really useful explanations in his interviews on building a position using the writing of puts as a means to acquire shares. Yep. So that's Matt Peterson's, what he's called a structured value approach, is to sell put options on companies that he wants to own. And that allows him to buy in or put these shares, effectively pay a lower price for the stock by writing puts than he would buying in the open market. And if he's not put the shares, he's still earning money on the premiums that he's collecting for the put options, sometimes quite compelling returns in the 20s, 30% per year, which is pretty impressive. And he's done well with Seritage Growth Properties, selling put options. I think that's the main one he gave the example of in his annual meeting. We're coming up on an hour here, guys. If you have any burning questions, hit up the super chat. I'll make sure I get to your question. Otherwise, I will just go through a few more of these in chronological order. Let's see. Writing options from Jonathan has been an excellent strategy the past year with U.S. gambling craze, harvesting high premiums. Yeah, writing put options seems to really make a lot of sense in an environment with higher volatility, okay? Because if you understand the flip side of writing put options, people are buying these put options because they want to ensure that they're downside protected in their portfolio, okay? If a stock drops below a certain price, they can say, okay, I get to sell this at X amount and not have to be in this stock below that amount. So you're basically selling investors insurance on their positions. So when there's more volatility, when there's more fear in the markets, there's more people who want to buy that insurance to protect their downside. So that's when premiums are going to be higher from selling put options. We do have a super chat here. Maximilian, awesome name. I love that name, Maximilian. Baba still interesting. JD.com is what happens when negative sentiment on a Chinese e-com stock inverts. Thoughts on whether Baba will one day recover? Well, I fully believe Baba is going to recover. I believe what's happening now with Baba is I mean, if you guys really want to understand investor psychology, just look at any market in the world and look at it over a number of decades, okay? And what you see is periods where the market is going up, right? Up, 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 up. And then much shorter periods when the market goes down, okay? And that really just plays into investor psychology. As the market goes up, more and more people think, oh, the markets just go up. I'm going to miss out if I don't get in. And that continues, and it's slower. But when the market starts going down, and most of the people invested in the market don't really know how to value a business. Okay, they're in. If you remember, if we're looking at that slow, steady climb, they're in because they're seeing their neighbors, their family members making money in the market, and it seems like the market can only go up because they can't remember a time when the market went down, because usually it takes a decade or more for the next crash to happen, and for a lot of people to forget, a lot of new people to come in and think, well, this time it's different, right? The markets only go up. So you get this up, 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 and then once it starts going down, everyone who doesn't understand what they own gets spooked out of the market, okay? And that's why it goes down fast. And I think that's what we're seeing with BABA. In this case, it's not a market, but we're talking about, a market in the sense that it's a country, okay? China. There's a lot of investors who don't really understand China, who are invested in China. And so the crash happens fast, okay? Because people realize, oh, I don't understand this thing. And it's dropping. I don't know why it's dropping, but I better get out before it really drops, before I really lose my shirt. So I think that's what we're seeing in Alibaba. Looking at the business fundamentals, the price action and the business fundamentals seem very dislocated to me, okay? So over time, the price is going to come into alignment with the business fundamentals. At least that's, as value investors, that's sort of our framework. That's our belief that that's what's going to happen. So that's what I believe with Alibaba. And in the short term, it's all just noise to me. Okay, so it doesn't concern me what's happening right now on paper with my Alibaba holding. If it goes down, it can go down to $50 per share. Okay, there's no limit to how low it can go if my thesis is still intact with Alibaba. If I still see growth in the business, I don't care what's happening with the price. So that's where I'm at, and that's maybe more extreme than many of you who are also looking at these businesses and trying to understand the businesses. But that's where I sit. Let's take one more. Thank you again, Maximilian, for that super chat. We'll take one more. What do I want to take here? Yeah, so ADI, Li Lu and Buffett both bought Berkshire last quarter. Does not get more compelling than that. Yeah, I mean, it was surprising for me to see Li Lu buying into Berkshire Hathaway. But yeah, there's probably a lot to dig into there, right? There's probably a lot to be intrigued by in Berkshire's business model right now. The volume of cash that they're sitting on. I wonder. Part of me wonders if there's a potential for Li Lu to take over as the CEO of Berkshire Hathaway. I know Buffett has spoken. I don't follow Berkshire that closely, probably not as closely as many of you. I think I'm pretty sure Buffett named the CEO. That's kind of in line when Buffett steps down. But Li Lu, I mean, to me, seems like a front runner if, in fact, Li Lu wants that role with Berkshire Hathaway. But that thought popped through my head right when I saw Li Lu take a stake in Berkshire. I was like, oh, is he jockeying for some kind of promotion here as the guy who takes the reins at Berkshire Hathaway? But again, 100% speculation there. Probably more than likely it's something he's seeing in Berkshire Hathaway, where now may just be a very opportune time to own Berkshire compared to other opportunities available to Li Lu. So definitely got my attention, and I'm sure it got many of your attention as well. So we'll leave it at that, guys. Thank you all for joining today. This has been a very lively chat. It's been 2 weeks since I've done one of these, so I'm glad to be back. It was easy, just slide right back into the saddle. And thanks for making it fun. Thanks for making it interesting, all of you in the chat. Until next time, I will see you guys later. Bye.